Hello and welcome to the weekly commodity market update. I'm Brownfield anchor Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will.
Hopefully you've had a good start to your morning. It's been a little rough on my end.
Technology can be a challenge from time to time. It's great until it's not working.
Yeah. So some webcam issues that we sorted out just a little while ago before we got rolling. But
Yeah.
what we're hopefully seeing is those issues aren't reflected, I guess, in the grain market. So looking at the past week, can you see or tell me what adjustments did we see?
Yeah, largely a down week across most of the commodities in terms of price. Old crop corn for that July contract down 31 cents to 7.72. New crop corn down 32 cents to 7.10. Old crop July soybeans were down 60 cents to 15.85. New crop soybeans in November were down 44 to 14.46. Soybean oil was down 0.3 of a cent for a final price that brought it below 80 cents per pound. Soybean meal down almost $20 per short ton to $411.10 per short ton. And then that new crop July wheat down 37 cents to $10.92. So a pretty down week for commodities, largely reflective of the overall market sentiment.
What kind of highlights did we really see getting here? We saw some adjustments on interest rates. So what else did we see?
Yeah, a lot of highlights actually last week that kind of got us to where we were. You mentioned it, the Federal Reserve last Wednesday kind of kicked things off a little bit with increasing their short-term interest rate target by 0.5 percentage point on Wednesday. That was the largest interest rate hike in the short-term rates since the year 2000, so 22 years ago. That hike sent stocks and bonds tumbling while increasing treasury yields. The dollar index posted fresh 19-year highs earlier this week, and that'll continue to create some headwinds for U.S. exporters, including ag products. U.S. ag census data last week came in at $49.2 billion during the first quarter of the year. So that's January, February, and March. That would suggest that we're on track for a record trade value for the calendar year. As a reminder, it's both volumes and values that get calculated in the total dollar figure there. Grain transportation, we've talked a lot about grain transportation and some of the logistics challenges companies are facing. They got some added transparency last week when the U.S. Surface Transportation Board ruled Friday that the four major railroads would have to provide a plan on what they're trying to do to increase at least the number of cars and shuttles that can be used on a week, and then provide weekly progress reports. U.S. ethanol production grew for the second week in a row, up 6,000 barrels. New export sales for soybeans, soybean meal, soybean oil, grain sorghum, and wheat all saw higher weekly totals than the previous week. Corn was the lone commodity down week over to week. Managed money traders sold off net futures positions of corn, soybeans, and wheat again for the second straight week. We normally don't see that, or we hadn't seen that in a long time, and we've had it 2 weeks in a row. Yesterday, the Brazil Ag Rule or their consulting firm Ag Rule estimated that the 2021-2022 Safrinha corn crop would come in at 80.9 million metric tons. That was down 5 million metric tons from their previous forecast. That puts total corn production for Brazil at 112 million metric tons, which is 2 million below where many traders expect the estimate to be on Thursday, and that's also below the USDA's April update by 4 million metric tons. And then crop progress showed 22% of the U.S. corn crop planted compared to 14% last week, but down considerably from the 64% last year. So a lot there, Will. Sorry, that took a little bit, but we did have lots of action last week.
Well, just to carry off that, to really kick off the conversation today, I guess let's first look forward before we kind of look back. So looking forward, what we have the WASDE report, the global supply and demand estimates coming out from USDA, and you just mentioned an adjustment downward on some expectations in South America on the Safrinha corn crop. Do you expect to see a lot of that reflected in the upcoming report from USDA?
I do. I think we'll see USDA revise South America corn production down, potentially both for Argentina and Brazil. It's maybe a little bit early for a big revision, and big revision for Argentina would be 1 to 1.5 million metric tons of their corn production. It's maybe a little early there, but for Brazil, I do expect to see a small revision down somewhere in the neighborhood of like 115 million metric tons, which is 1 million less than the 116 million that they had last month. Traders, as I mentioned, are estimating 114 million metric tons.
Well, with the week over week losses in most things, do you think that that'll add kind of re-add bullish pressure back into the market at least for the short term, or do you think a lot of that might already be factored in?
Well, so markets were up overnight, pretty strongly overnight into the morning trading session. It was a brutal week. I think that was representative of the larger market sentiment across the entire economy. For those of you that watch retirement accounts, last week was not a great week for retirement accounts. It's largely, traders are anticipating that the Federal Reserve will have to take a tougher stance on inflation by raising interest rates higher than what they've suggested so far. So stock markets took a tumble, and I think that just spilled over into the general market economy or the commodity markets as well. We also probably saw some, at least, indication that planting progress is expected to tick up as we've talked about last week. Will, you and I talked about, was some of the planting delays being calculated into the market? I think we can say they were after, the forecast for this week turned dry across, Illinois, Iowa, northern Missouri. The markets took a pretty significant plunge. That came back a little bit as rains continue to pick up in the upper plains, Minnesota, South Dakota, and North Dakota, where planting progress is really slow and expected to remain slow this week. So, we could see some bullish factors in the market come this week, and a lot of that's going to be dictated by what happens to the USDA reports on Thursday.
Well, it's an interesting conversation to have, talking about the weather impacting the market right there, because there's a balance, obviously, between farmer expectations for what crop they're going to get, and a lot of concerns in this area. At least we're getting corn in before May 14th, and it looks like now that could be a possibility for a lot of farmers. So now those expectations for that crop maybe bump up a little bit, and like you said, that's been reflected in the market as it's dried out a little bit. And we saw a sell-off.
Yeah, no, good question. So I do expect this to be a big week for planting progress, especially in Missouri, Illinois, Indiana, southern Iowa, Ohio. The forecast looks dry. We've got temperatures in the low 90s, upper 80s for the majority of the week. So it's going to be a big week for planting in those states. Looking at a national level, the largest week we've ever had for planting progress in one week was 43%. I don't think we're going to hit that, but certainly I think somewhere in the mid to upper 20s is very possible. Part of the reason why I don't think we're going to hit that is Minnesota, southern Minnesota, South Dakota, and southeast North Dakota have quite a bit of corn acreage in those areas, and those folks aren't going to be able to get plantings or planters rolling until end of the week. Parts of Ohio too, southern Ohio, it'll likely be mid to end week before they can start rolling as well. So I do expect a big planting progress week, and that'll, dampen the market a little bit as we see corn getting planted. So,
shifting back to the WASDE report that's upcoming this week, what kind of mindset should farmers have while watching the market as it adjusts to what the report has within it when it comes to how they market their grain?
Well, so the May WASDE report is in my opinion, a top 4 market moving report of the year, right in line with planting intentions in March and final planted acreage or acreage report in June. I guess it's not really final until January, but the May report's a big report because it's the market's first official hint, I guess, towards the new crop production and demand. So we'll get 2022 and 2023 estimates across the board. Looking at this, and at least what traders are anticipating coming into the week, they're expecting a robust demand continuing to pull down stocks well into next year. So we look at corn stocks, ending stocks, about 60, 70 million bushels less than ending stocks this year. So not building corn stocks. Soybean stocks see a little bit of a rebuilding period, maybe on some softer export demand into the Chinese market as well, given that demand out of China has been soft, and we expect Brazil to have a big crop next year. Again, we said that this year that Brazil would return production and a drought happened again. That probability of a third short crop in South America is relatively low, but certainly within the realm of possibility again. So the expectation is that prices remain high heading into 2022, 2023. with some of those tighter stock numbers.
I'd like to shift our focus just a little bit. You were talking earlier in your market highlights about the market being pushed lower by general factors, and a big part of that was the interest rate announcement on the largest move, in the last 2 decades. So really, what continued impact do you think that they could have, and what should we be expecting?
Yeah, so fundamentals are the biggest drivers in markets. I don't want to overlook that. I certainly think that a big decline in prices last week was due to some of the optimistic outlook and planting progress this week. So I don't want to overlook that. But then on the demand side, just kind of a general sense that with higher interest rates would create lower future demand for product. Both the dollar increasing relative to other currencies creates a headwind for us to export. Higher prices and higher interest rates likely mean less spending power, so maybe lower gasoline demand as well as we look ahead, especially in the face of higher gasoline prices. So I think the higher interest rates certainly weren't the major cause of price falling last week, but they were a contributor just because I think the sentiment of, hey, we could have softer demand going into the future is a challenge. Probably if I can add in a bearish factor, I don't want to sound overly bullish here into the markets, because I think there's potential for markets to move higher and receive support come WASD Day on Thursday. But a bearish factor that's out there could be the U.S. administration's large interest in increasing production here in the United States for the summer and into the fall. Early on, I didn't think we'd see huge amounts of acreage due to some of the proposals to increase loan rates, encourage double cropping. The conversation now has switched to how do we use crop insurance to increase production, and I think some of those proposals actually have potential to bring some acreage into production, which larger acreage in the United States would lower prices here in the United States and globally as well.
Well, one of the things talking about the acreage discussion, we look at CRP, so the Conservation Reserve Program, and we saw acreage, a fair amount down in the first report, I guess, from USDA, just noting that acreage. But a lot of that, probably isn't necessarily, very great crop ground. It could be just a lot more pasture ground. We're looking at, cattle feeding issues potentially with a lot of the drought we've seen out west. So really, how does CRP play into that discussion on acreage?
Yeah, great question. So we don't think it'll have an overly huge impact in terms of the expiring acres and where they're located. They're primarily located in Montana, South Dakota. And so we, as you mentioned, it's not prime corn and soybean growing territory, but that is where we grow a lot of barley and spring wheat. And so if we're looking at crops, specifically wheat, that's potentially an area that could see some impact and help with some of the spring wheat crop. However, the short crop in the wheat market is in the winter wheat, especially the soft red winter, the hard red winter. And when we look at where we can double crop, the retiring CRP and encouraging CRP to come back into production probably doesn't help that category out as much. This is where I think, the crop insurance discussion about, hey, can we take prevent plant on corn or something and plant another crop without being penalized for the prevent plant claim? To me, those seem to have maybe some potential to bring some double crop acres into winter wheat and soybeans.
And just winding down, we don't have a lot of time left here, but how much of a possibility do you think we'll see some more double cropping, and how much would that actually impact the market?
So double cropping is a management tactic. You have to be prepared, I guess, if you will, if you're going to double crop. It's not just something that you're going to go out and do it. You got to prepare. So it's one of those things that I expect some increase, but not a lot. The thing that I think we could see, and that what 2019 proved to be true, was that if given the opportunity to take prevent plant on corn and plant soybeans, producers will do it, because that's one of their natural tendencies. So some of the changes we're seeing could drastically increase soybeans here in the United States, with the potential to follow that up with a wheat crop this winter.
All right, so definitely a lot of different factors for farmers to keep in mind. Just to recap a little bit, some preview for the WASDE coming out, some general facts with the market and interest rate talk, and then a little bit of CRP discussion there at the end. So reports upcoming to keep in mind. Wednesday is the ethanol report. Thursday we have again the global supply and demand estimates out from USDA, along with export sales and the consumer price index. So Thursday is going to be a big day for the market in all likelihood. As always, thank you, Ben, for joining me. I'm Will Robinson on Brownfield.